we think. Hello, everybody out there. We are going to do a review on Chapter 3 quiz. So, what problem are you starting with?
It's in just within the chapter,
okay.
Number 6 on page 88.
Okay, number 6 on page 88. Oh, okay.
Just
declare a cash dividend of $5,000. Okay, now relating to cash dividends, or any dividend really, stock dividends too. But there are 3 different dates we worry about, right? What are they on cash dividends or stock dividends? 3 different dates. One is the payment date. I'll give you the easy one. Okay, one's the payment date. So this is number 6 on page
88.
I'll try to get it set. It goes away if I don't write it here. Okay, number 6, page 88. Okay, it's right in the chapter. All right, and what are the 3 dates? One's payment date for dividends. Before you can pay it, of course, you must do what?
Declare it.
Declare it. Excellent. See? Declaration date. We'll do the journal entries for all 3. And what's the other one? This is when you declare it, board of directors, right?
Right.
This is when you're going to actually pay the checks to the stockholders. What's the date in between for? To find out who owns the stock. Date of record. Record date, remember? Remember those? Don't you remember everything we did in 101? Jeez. Okay, anyway, so what do we do? Stop doing a brain dump. You're at it, you're building a skill set. You know everything you learn, right? Until you get old and you get forgetful, and that's fine. Okay? All right. So what do you do at declaration date, everybody? Let's say this was January 1st, you decided to do it. This is January 15th, and we will pay the dividend January 31st. Got the idea? Okay, so what would our journal entry look like on January 1st? Because now we have the obligation. So that's starting to answer your question. Deba, what? What are we doing? We're taking some of the company's previous earnings, paying them out to the owners. Where are the company's previous earnings stored in our balance sheet?
Retained earnings.
You got it. Retained earnings. So what we're going to do is we are going to take some of retained earnings, right, whatever your balance is there, and we are going to take them out, right? Let's say we had $100 million in there, and we decide to pay a $2 million cash dividend. Don't we have $2 million less dividend, or retained earnings, rather? Yeah. So we're going to take the 2 out of there, and we'll only have 98 left then when we go forward, huh? So the dividend is a debit to retained earnings, isn't it? You can either use a dividends account, which is a temporary retained earnings account, which you would close to retained earnings, right? Or you can just go straight to retained earnings.
Okay.
Coming back?
Yeah.
Dividends are not an expense of the company, right?
Right.
You didn't have to pay a dividend to make your income.
Right.
It's not a cost, right, of getting your revenues, right? You just decided to give some of the profit to the owners. What I always like to say is if you put money in a savings account, let's pretend we still get 5% interest. You have 5% interest on a savings account, put $100 in, at the end of the year you have 105, right? You'd say you earned $5, wouldn't you? What if you take the 5 out? I wouldn't say I earned nothing. I'd say I earned 5 and I took 5 out. Got it?
Yeah.
Nice analogy. Okay, anyway, so we would debit retained earnings, or if you want, a temporary equity account called dividends for whatever the amount is, okay? And then what would you do? Credit what? I haven't paid it yet, so what do you want to credit? Oh, Keith, what did you do? There we go. All right, what do you want to do? If I was paying it, I'd credit cash. If I paid it and declared it at the same time, let's not do that.
Payable.
Yes, and what would be a really name to call a payable that is for dividends? Dividends payable. We're brilliant. Okay, we got it. Okay. Then what do? That's the declaration date, right? Okay. What would you do on the record date on January 15th? You can answer this one. Come on. You just find out because the stock's trading, right? Stock's trading between January 1st and January 15th. We want to know who owns the stock on that day. It's also going to trade between January 15th and January 31st. So whoever owns the stock in the data record, you get a picture of who owns the stock. That's who's going to get the check.
Okay.
That's what it's for.
Okay.
Got it? Okay? So isn't it amazing how fast you can learn this stuff when you really want to learn it? Wow. It's cool, isn't it? You do that with everything. Everything. All right? Anyway, when you go to work, do it do it that fast. No matter what you're working on.
I'm trying really hard.
Yeah, you too. Oh, laugh, you too. Okay, yeah, okay. January 15th, it's the date of record, but there's no entry because we didn't exchange anything. We just found out who owns the stock, huh? What do you want to do on January 31st? You want to pay the dividend. What do you guys pay dividends with? So it's an asset, you reduce it, what do you do?
No, credit cash. Oops,
All
sorry.
right, you credit cash for whatever the dividend is, right?
And then you
And of
credit
course,
the
what do
payment.
you not have anymore?
A dividend payment.
Yes, good, okay. All right, let me be mean to you for just a second. You have to not answer until you think. I know you knew the answer to that. Don't try to answer too quick. Don't be slow, but think, make sure you're right, and then answer. But keep having the guts to answer, right? Okay, so, all right, it's really easy to just do stuff and not think about it too much. I'm really good at it. I get going so fast, you notice it all the time, right? I get going so fast I get myself lost. I'd have been better off to slow down a little and not get lost. Yeah, okay. All right, anyway, what else do you want? Is that good enough on that one?
Yeah.
I
that
beat
makes
that to
sense.
death, didn't I? Okay, what else should we do?
I have another one. Your explanation was really good. So.
Isn't this fun?
Yes.
I think it's fun to do this stuff. I do. You learn a lot.
On the questions at the end of chapter 3, page 132.
Chapter 3, page 132. Questions? Probably theory stuff.
No, this one's another. It's very similar.
Okay, which number are we on?
Number 3.
Number 3. Okay.
It's really
Okay, name the account, debit, and credit for each of the following transactions. Cool, let's write the journal entries. Okay? So we're on number 3 on page 132. Number 3, page 132. Sometimes the speakers don't pick up. I think there's a mic in here too, so I'm standing right next to the desk. All right, what's the first one say, you guys?
Billing a customer for work done.
Okay. Now, I assume the work was done this month?
I'm assuming because
We're
we
gonna
can't get
assume
it
that.
for.
Okay, and we're billing them, right? Actually, why would we bill them if it hadn't been done yet? So we would, okay, so the work's been done. I was wrong on that. If the work's been done, it must have been done now if we're billing them. Okay, so, why do you do work for people?
Make revenue.
They're in revenue. So what do you think this is? You did work for them, some sort of revenue. What kind of business are these folks in?
We don't know, it doesn't say.
Business of making money.
Business of making money? Okay, so
Maybe
listen.
cleaning.
It's a cleaning business, I don't care. It's something, right? So what they want to know is what? It's some sort of service revenue, right? If you did work for them, if you delivered a product to them, goods, right?
Got it.
Bottle list, right? You know, then you would have sales, right? It'd be sales revenue. This would be service revenue, wouldn't it? You want to debit or credit that? How do you increase revenues? You guys are thinking, come on. How do you increase revenues?
I want to say debit.
It's a subset of equity. Equity's on the right-hand side.
Oh, credit.
Okay, look. You always go back to this. You envision this in your head. When I say that, I don't think I have this memorized. I don't think I remember what they all are. I think I can see it sort of in my mind, the template. You know what I mean? I really do. I think that's the way it is for everybody. And then, so you need to be there. Okay, so it's not, oh, gee, how do I do that? No. Assets are on the left. What's the synonym for left?
Debit.
Debit. What's the synonym for right?
Credit.
Credit. So how do you think, right? And the debits have to equal the credits? Okay? So how do you increase assets then, because they're on the left?
Debit.
With debits. How do you reduce them then?
Credit.
Credit. Liabilities and equity are on the right. How do you increase them then, of course? To get it to have a credit normal balance, how do you increase them?
Credit.
Credit. Both of them. It's not good or bad or anything, or even plus or minus. It's left and right, isn't it? Okay? Debit means left, credit means right. Okay? How would you reduce them if you increase them with the credit?
Debit.
Yeah. Now, the reason revenues are a what? Well, let's think about it. Revenues are a subset of equity. Equity is my wealth. As I earn revenues, what happens to my wealth? I make more net income. Come on, what happens to my wealth? Do you get richer if you earn, or you get poorer? Richer. So what do we mean? Equity is my wealth. My wealth gets bigger as I earn. Revenues represent my earnings. As I earn, I have more wealth. So these are temporary accounts, revenue and expense, temporary equity accounts. They're not on the right or left, in other words. They're a subset of equity. Got it? You temporarily keep track of it for the year, and then you close whatever's in those accounts at the end of the year into what account? Retained earnings, which is what kind of an account?
An equity.
Equity account. Got it. Okay, so that net income increases retained earnings when you close the books. It's all, you know, to the extent you have net income, you're always increasing retained earnings. Each transaction is increasing retained earnings, right? Because you have to have the current year net income to retained earnings to get your balance sheet to balance, don't you? And the reason for that is sometimes it'll be debiting cash and crediting revenue. Sometimes debiting accounts receivable and crediting revenue. Sometimes debiting unearned revenue and crediting revenue, but all those are between the balance sheet and the income statement. You better pick up both, right? Or you'll be out of balance in your balance sheet. Does that make sense? You better pick up the revenues and expenses too, right? Net income and added equity. You guys knew that already? This is sort of how you think about this. Okay, so what are revenues? Debits or credits, seeing as they increase equity? They have to be credits. Absolutely, they have to be credits. Why? Because equity is a credit. Why is equity a credit? Because it's on the right. You can always go back to that. Silly, but you can go back to that. What do you have to memorize? Assets are on the left, and debit means left. Boom, I got all the rest. Common sense then, right? What do expenses have to be, seeing as they have to be the opposite of revenues? What would you say that has to be? Revenues are credit. What do expenses have to be? The opposite of credit is a debit. Sure. Now that's one reason, but what's the other reason expenses have to be a debit? What do they do to your wealth?
It decreases.
Yeah, as you have more cost, you have less income or more loss, right? Okay, you have less income. What happens to your equity, your retained earnings?
And those decreases.
Decreases with all the expenses, right? So how do you reduce equity with a debit? So because expenses reduce equity, what do they have to be? Debits. Boom. Net income, debit or credit?
That is a credit.
Yeah, why?
Because it increases your equity.
That's true. And all it is revenues less expenses, right? Is it true that everything you sell less all the costs is what you made, your net income, right? So the credits that are in revenue less the debits that are in expense is the net income, which is a net credit, huh? Which would increase retained earnings. What would net loss be?
Debit?
Of course. Why?
Because it decreases.
Because it decreases your wealth, right? You bet. And it's the expenses subtracted from the revenues, but now the expenses are what?
Higher.
Higher. They're bigger. Yeah, so you get in that debit, don't you, when you put them together? Okay. That makes sense?
Yeah.
We got it, don't we? Use this, use this, use this, use this. Right? You have to have this just hardwired in your brain. Okay? Not memorized, understood. Okay, yes.
Okay. So retained earnings is like when you close the revenue and expense, you're going to send it to retained earnings.
Yes.
Now, is contributing capital like its own like?
It's a separate category. There's no closing entry to it.
Okay.
Contributing capital, retained earnings.
Right.
Okay. This is great, you guys. Contributing capital, retained earnings. What happens to retained? Well, with both of them, what do you start with? All the accounts in the general ledger. Assets, liabilities, equity, revenue, expense. The day you start your business, what are the balances?
Zero.
Okay. So we start with nothing with both of these. Okay, let's talk about where contributed capital comes from. The owners contribute. They might contribute cash, land, buildings, all kinds of things, right? What do? They'll debit all those assets and credit what? Contributed capital. That's everything the owners have ever invested in the company since the start of the business, okay? Now, you could also debit it if they take some out. We'll get to that stuff later. Okay, we'll do that later. You got the idea, though? That's all that is. Now, that's contributing capital, right in the name. Retained earnings is what? What you earned and you kept. Retained earnings. Okay, so what happens is the net incomes year after year after year get added to retained earnings when you close the books. Before you close the books, you have to add it anyway. Let's say you're doing monthly financial statements or quarterly. You have to pick up the year-to-date net income and add it to retained earnings, right? Or your balance sheet won't balance. That make sense?
Yes.
So they're really already part of retained earnings. They're just not in the account officially, right?
Right.
Mechanically, until we close the books. Right? So if you're doing an interim statement, be sure and pick up the net income, or obviously your assets won't equal liabilities plus equity. You'll be leaving out some of the equity. Got it? Okay, the current year change in equity. If it's a net loss, what happens? Then you got it, because it's going to be a net debit. That closing entry does what, by the way? A closing entry would do what? Let's say we only have two accounts. One's called revenue, and it's got $1 million in it, okay? And the other one's called expense. Now really revenue, there are 30 accounts, and expense there are 3,000, okay? In a big company, right? Whatever it is. Well, maybe 300, 3,000, but either whatever. Okay, and this is 800,000. This is a credit, isn't it? This is a debit, isn't it? It could represent thousands of accounts, but if there's only two, it doesn't matter. Net income, nobody can ever do that. Is how much in this company? Okay, do the closing entry. What would it look like? That's obviously a credit, right? It's not an account. It's the difference between revenues and expenses. Okay, do the closing entry for me. What would you do to revenues to make it zero? Yeah, the revenue accounts, all of them, for a total of $1 million. That makes sense? It's gone. What would you do to expense accounts to make them zero? Credit them, because they got debit balances. This is a closing entry. That's all it is. And where does the 200 go?
Into either income summary or...
Well, income summary if you want, but then where are you going to close income summary to? Retained earnings. So you can put it into income summary and then close that to retained earnings, but the same effect is going to be what? I'm increasing retained earnings by the 200. That's how it gets there when you do the closing once a year. Okay? We good? So let's go back to this. What was the first one?
Billing a customer for work done.
Okay, we're billing a customer for work done. All right. Okay, we bill a customer for work done. We're on page 132. So, because we did the work, we earned revenues. We already established that, right? And where we started all of that was, how do you increase revenue? Increasing equity, how do you increase revenues? With a credit. And it'd be service revenue, wouldn't it?
Yes.
So the journal entry would be service revenue, so the answer would have been credit service revenue, right? Debit what? They paid me, it'd be cash. They didn't pay me. I billed it. Got it. What kind of account is accounts receivable? It's an asset. Why do we debit it? Because we have more. Yep, got it. What's the next one?
Receipt of cash from customer on account.
Okay, so what do you want to do? They paid me cash.
Debit cash.
Got it. More asset. Credit what?
On account receivable.
Sure. What if instead I had sold something to the customer? That'd be debit cash for credit sales, or service revenue, either one. True? What's the next one?
Purchase of office supplies on account.
Okay. What I get?
Office inventory.
Yeah, let's call it an inventory. Okay.
Is it, okay, so,
It's not
does that
merchandise
matter?
inventory, it's office supplies inventory.
so can I not say office supplies?
Probably
You
count it
want
right,
it to
write
say
inventory down next to it, say inventory.
Okay,
Because there's office supplies expense, there's office supplies revenue, there,
okay,
and then office supplies inventory,
Got it.
Got it, so don't go there.
okay.
Okay, put another word on it for now. In companies, I'll just call it office supplies probably.
Okay.
But the account number starts with a 1, so you know it's an asset, so it has to be inventory, right? So office supplies on hand, they might call it. Okay, what do you want to credit? How'd they buy it?
On account,
So,
account payable.
absolutely. Okay, what's the next one?
This one is what I didn't really understand. Purchase of 15 gallons of gas for the delivery truck.
All right, so I'm purchasing the gas to put in the delivery truck if it's only 15 gallons. I'm not putting that in a gas tank in the ground, not 15 gallons, I put in 1,500 gallons or something. So, 15,000, I don't know what they hold. Anyway, what do you think? Credit cash? We paid cash for it, did we? Good man. You know what I like about that? Do the easy part first. You got half of it anyway, and you know it's a debit. What are the possibilities, by the way? We're debiting an asset, maybe. We're debiting a liability. We're debiting a revenue. We're debiting an expense. What have you got? We're debiting equity, right? Directly. That's all there is. Assets. Well, we can debit another asset. Asset. I said that. Asset, liability, equity, revenue, expense. It's got to be one of those. And we know that if it debits an asset, it increases it, right? If it debits a liability, it reduces it. If it debits an equity, it reduces it. If it debits a revenue, it reduces it. If it debits an expense, it increases it. Now, what do you think this probably is? It's gasoline, right? What do you think it probably is? Either we still have it or we used it up. If we still have it, what is it? Asset. If we used it up, what is it? That's it. Right, guys? This gasoline is going to be an expense when we use it up. Okay. It's 15 gallons. I bet we're gonna keep driving to the end. I bet we use it really fast. What do you think you probably do based on materiality? Are we gonna treat this as gasoline inventory that's in the gas tank? I think it was in the ground in a big tank, I think it's inventory. Don't you? But I think, you know, or if it's in a big, you know, Exxon's got it in one of their big containers that hold millions of gallons, right? I think that's inventory. In the truck, what do you think it is? Got it.
Delivery expense?
Or would it be gasoline expense?
You know what, it can be gasoline expense.
Should be delivery expense?
It can be delivery expense if you only want to have one account for delivery. I don't like that very well. I like gasoline better. And what I do is I'd have a whole bunch of different expenses relating to delivery. And then maybe on my income statement, I combine them all together and call it delivery expense. But then when I'm analyzing the accounts myself, I can see how much I spent for gasoline and for whatever, right? Depreciation on the truck and whatever it is. So however you want to set it up. A little more detail for inside the company, less detail for outside. You like it? So call it gasoline expense, I don't care. Fuel expense. But maybe we use gasoline and diesel both in different rigs. Yeah. Is there another one?
No, that's it.
Okay, good.
I just wanted to call it an asset.
That's because it is one. But it's kind of like when you buy a prepaid. You know, I buy a prepaid, let's see, if I'm going to use the prepaid up in the next 2 months, and I'm not doing a financial statement until the end of the year, I'm going to expense it now. If I put it in a prepaid and then have to write a journal entry, expense it. If I'm not going to use it all up by the end of the year, now I can either put it in a prepaid or an expense, and then just adjust it like we were doing in class last time. Was that your class or was that principal's that did it in?
No,
As you guys do. I did do the same stuff in both classes, just at a different level with you guys and a different speed with you guys. You didn't think I could even go faster, did you? When you had me for principal. That's impossible. He couldn't go any faster. You want to do some deferrals and accruals real quick?
Yeah.
Okay. I want you guys to write them out for me. It'll be nice practice for you. And, okay, we're going to do expenses and we're going to do revenues. And I am not going to help you. If you can do this, and by the way, when you look at problems on the quiz, it's not going to say it's an accrual or a deferral, right? They just are. So when you look at it, step back and say, okay, that's whatever it is. Now I know where I'm going. Okay? So way to look at it. And this cash to accrual thing, or accrual to cash, it's just this. It's just deferrals and accruals. That's all it is. Okay, guess what? If you're a cash basis company, you know, your books are on cash basis, you must record all the deferrals and accruals. Right? If you're accrual basis and you want to do a cash basis statement, you have to take out all the deferrals and accruals. That's it. Right? If you think about the cash flow statement that we did, when you go from accrual basis income in the operating section, right? That cash flow statement, you go from accrual basis down to cash basis. All you're doing is you're taking out the accruals and deferrals. That's it. The changes in the current assets and current liabilities, that's the accruals and deferrals, isn't it? It is. Okay, so we got revenues and expenses. What are the three distinct time periods when you are going to get paid for a revenue, or if it's an expense, when you're going to pay for it, when the cash is going to change hands?
Cash in advance.
Okay, so let's do now first at the same time. Then you can do it in advance.
And then later.
And later. And there are no other time periods physically possible, right?
Yeah.
That's it. That's all there is. Now with revenues, they might not pay you, and that's bad debt expense. We'll worry about that later. And expenses too. All right? I hereby decree that it's $2,000. It's for,
Is this just for the revenue, or is this one company doing something for another?
it's for one company doing something for the other. These guys are CPA firm extraordinary. Hope that's not really their name. Okay? That's who it is. They are what? They provide CPA services to people so that they can earn revenues and become wealthier. Right? I never ever provided services to the CPA for any reason other than that I was going to become wealthy. Right? Maybe. Well, I do now.
No.
Not profit, yeah, and I always do. It always do something. I either give it away or I charge full board. My dad taught me that. You gonna do something for a cut price, all you do is you reduce your price. Do it for nothing. So he'd tell his friends they wanted to work to repair their basement or remodel or something. Yeah, I'll do it in my spare time. But I'll get it done when I get it done. You have to buy all the materials, I'll do it for you. They're like, well, how much do you want me to pay you? I need to pay you something. Then you need to pay me. Tell them how much you charge an hour. And I'm like, well, then I can't afford to do my basement. He says, I know. Well, then maybe I could do it myself and you could show me. You can do it yourself, but I can't show you. You know, I gotta teach somebody to be a carpenter while they do their basement. Yeah, so most people go away and leave him alone. His good friends, he'd do the work for him for free because he volunteered. You know, it worked out far better. And some of them would actually help me out. It's a job. Okay, so on the other side, this is Papa John's. Have I used Papa John's before?
No, not in this class.
Let's do that. Papa John's. Guess what? Papa John's actually has CPAs working for them. Okay, it's only $2,000 for that. Doable. Oh, and the month is June. Services you provided in June. Papa John's pays a little more than that. The CPAs per month. All right, but it's June. Let's do it. Record. You'll have to pick the dates you need. Go ahead and pick your own dates. I'm not giving you the dates. And while you do that, do you think that might take 3 minutes?
Okay, question before we get started. Cash in advance is a deferral, right? And then
Of course
cash
it is.
later is an
We're not
accrual.
deferring the cash, we're deferring the revenue.
Or deferring revenue.
Yeah, so yes, it's a deferral, because I got the cash, but I haven't earned it. So I'm deferring the revenue. Cash later is an accrual. I'm accruing the revenue even though I haven't been paid. Same on the expense side. You got it. Absolutely. I'm going to get something to drink for you right now.
It's supposed to be there at 5 o'clock. Yeah, someone's going late. That just mixed them up.
Everybody's got their entries, right?
Mixed.
Okay. So what would be the date probably with now? 6/1?
Well, 6:31?
That's, well, 6:30, there's no 31. Yeah, very fine. 6:30? 6/1 would be a prepayment if it's for June. 6/1 would be in advance, right? Now, if it is any time in June and you're only doing monthly statements, it can be any date in June and you go ahead and expense it. But probably if they're doing the work and it's now, they do the work for June and hand them the bill at the end of June and get paid, right? Probably. Okay, probably not before they do the work. So, okay. So I like June 30th better, probably. This is not realistic. Papa John's would not let anybody do this, right? They're not going to pay you the day you give them the bill, right? So they'll probably pay you later is the way it's going to work. They probably wouldn't pay in advance either because they don't have to, right? They have good credit. So what'd you do? Debit what? Or rather, debit what?
Yeah.
Everybody cash? Credit what?
Revenue.
revenue.
I just put CPA revenue.
Okay, some sort of service revenue. I don't care. CPA service revenue, accounting service revenue. You don't have to put the word service on it, but it is service, right? Versus a sale. All right, what would happen on the other side with Papa John?
Debit accounting expense.
Debit,
Accounting.
Expense?
yeah, named.
Well, I put CPA expense.
CPA expense, I don't care. Accounting expense, professional expense probably, right? Probably wouldn't call it CPA expense. It's like, you know, I'm using CPAs up or something, but yeah, okay. Well, you might, well, people do use this up. There's no doubt about it. It might be a good name for it. Okay, and credit what?
Cash.
Cash. Like I said, I'm only 39. Yeah, okay, anyway, you use this up. All right, so then let's do it in advance. What date did you pick?
Okay, I did May 31st.
Okay, that's just fine. Any day before what?
June 1st.
Any day before June 1st, I like it, okay? So, because it's getting paid in advance, and I'm changing the way I do things. All right, anyway, so, May 31,
May 16th. Had to do my birthday.
is that your birthday?
Yeah.
Yeah, happy birthday, last May. Okay, yeah, anyway. So now what do we do? That was during summer, but no, it wasn't, we weren't there yet. Okay,
For expenses.
so what happens?
For what, revenue?
Yeah, let's do revenue first.
They pay the cash, the debit the cash.
They gave us the cash, right? We're deferring the revenue, we got the cash, okay? Debit cash, 2,000. What do you want to credit, guys?
Unearned revenue,
Why?
because we haven't earned it yet.
Yeah,
We haven't done
unearned
service.
revenue is a what?
Liability.
A liability. You could call it deferred revenue or unearned revenue. Yes, it's a deferral. And what do we owe them? What do we owe them? They gave us cash, what do we owe them? We owe them accounting services. We're not going to give them their cash back. It's not a payable like that, right? We're certainly not giving it back. We're going to earn it, aren't we?
That was
So until we earn it, it's a liability, an obligation. We owe them the work. How do you increase liabilities, all of them?
credit.
All right, credit? Is that yes and yes?
Yes.
Okay. You don't have to say anything, just holler if it's not okay. All right? I don't care who says what, but okay. So what do you want to do? Credit unearned CPA revenue?
Yes.
CPA service revenue? Whatever you want to call it. Okay, we wouldn't call it that, a CPA like that, because we know we're CPAs. Okay, anyway, so we got it. All right. What happens on the other side? If I have unearned revenue, what does Papa John's have? If I'm a CPA and I have unearned revenue, what does Papa John's have?
Prepaid.
They have prepaid.
They paid me in advance. It's a prepaid. What kind of an account is a prepaid?
Asset.
An asset. Do I have more or less of it if I paid them?
More.
More. What is my asset? They owe me the work. Right? That's all it is. Now, I spent a lot of time on this over and over. That's because every single one of these entries that you do in Chapter 3 and throughout your accounting career is this. It's all deferrals and accruals. If you understand it, just relax, look at what you got. Do I have a deferral? Do I have an accrual? Or do I have a cash transaction? That's it. Okay? It never strays from that, ever. Business transactions are going to get real complex. It's going to be hard to figure out what accounts to use. It's going to be hard to tell what's an asset, what's a liability, what's an equity, what's a revenue, what's an expense, what's a gain, what's a loss. All that stuff's going to be hard. Debits and credits are not going to be hard. Okay? So you have to have this really wired. That's why this is so important at the beginning. And it's really tough if you didn't have your principles recently, because you don't think this way, do you? Right? But other people sitting in the class do. So you keep pounding on it until you do. And what happens is on the first test, you're not going to be happy. And then after that, you're going to blow them away. Because you're going to keep working at the same level, and they think we're just reviewing stuff. I never reviewed anything in my life. We're going to dive into new stuff. And it won't just be new to you, it'll be new to everybody. Right? So all of a sudden, you're working harder than they are, more mature than they are. They're a bunch of little kids. I mean, look at them. Yeah, so, you know, they're falling in and out of love every other week. We don't do that, right? Adults don't do that. We used to, and we learned not to. And it just burns all your time and all your energy, and you can't concentrate. We know what's going on here, so that's our advantage. So they get to be young. We get to do a lot more work today. Okay, anyway, that's what happened. All right, anyway, so what would an advance be? We paid for it. What'd you pay for it with? So what'd you do?
Credit.
But debit what? What'd we buy? The prepaid. Prepaid what? Oh, I don't know. Prepaid CPA services, right? Now we own CPAs apparently. No, anyway, the PPs, prepaid CPA services, prepaid accounts, fees. So, got it? Okay, very good. And that's an asset, so you have more. Okay, so then what's going to happen here, you guys? I better give myself a little more room, hadn't I?
Quick question.
Yes.
On like a test or some sort, would you give us like the accounts you want us to use, like specific names, or like if we did prepaid CPA?
How do you like this one? What I've done a lot of times, I love this question. Maybe I'll do it again. I'll give you one line that says, please give me an example of a business. Well, maybe a couple lines. Please give me an example of a business. Two businesses, one buying services, one selling services. Show me all the journal entries for all the possible combinations of when they pay. And you just go with a blank piece of paper and you create your own. But don't give me ridiculous names, right? Don't call it stuff I get to use up later instead of prepaid, okay? Yeah, you know, and don't call it prepaid rent if it's if you did prepaid salaries. Come on, right? Call it what it is. So yeah, I wouldn't call this prepaid CPA either. I'd call it prepaid professional fees, and I'd call it professional expense, professional fee revenue or something. All right, auditing revenues or whatever it has to be. Okay, so what's going to happen next? What's the next date you want to do? On the same one. After you provide the services or receive the services, right? When is that going to be? Yeah, it's going to be June 30th. It's the same, right, as the one before because, well, that's when they did the services was in June. Okay, so let's do the CPA firm. If they did the services, what do they have now because they did the services?
Revenue.
They have service revenue. Here we have service revenue when we do the services. Guess what we have down here when we do the services? Service revenue. Guess what we're going to have if it's going to be paid later and we accrue it? We're going to have service revenue because we provided services. You credit service revenue because you did the services, not because you got paid, right? You separate the cash flow from the service. Got it? That's what accrual basis does. By the way, accrual basis includes accrual and deferral, right? We just call it accrual basis. Okay? All right, all right, so what would this one be? What goes away? And what happened? What do we get instead? What happened?
What goes away is the unearned CPA revenue.
Yes, because if we owed them the work and then we did the work, do we owe it to them anymore? No, so how do you get rid of liabilities?
Yep.
With a debit.
Sounds like I help people out with their accounting 101 stuff last semester.
It really pounds it into you, doesn't it?
Yeah.
What is it now? We earned that. What is it? CPA service revenue. Let's see wheels spinning. Clicking? It's working? Okay. Here's what happens. Whoops. I call it CPA service revenue there. That's what it is.
What did you debit?
Okay. Unearned CPA revenue. This is the liability. This is a liability. So it's this transaction and this one go together. In May, I debited cash and I credited a liability, unearned revenue, because I owe them the work, right? No revenue yet because I didn't do the work.
Wait, we're doing cash later?
No, this is in advance.
Like you're paying
Both are
now.
in advance. It's 2 different months.
Right,
Okay. So this is at May, right? They gave me the money,
right.
but I gave them nothing.
Right,
So I gave them my promise to do the work later. That's the liability. Got it?
yes,
Then this one right here is when I've done the work,
okay,
a month later.
okay,
So I no longer owe them the work, so the liability goes away. Make sense? That's the liability there, unearned CPA revenue.
okay,
And now I have revenue because I did the work.
right, okay,
Now are we there?
yes,
Okay, good. Why do I do that? Because I'm going to do a financial statement at May 31st, and at May 31st, I don't have the revenue yet, so I don't want to show it as income yet. But I do have the cash, so I want to show the cash on my balance sheet. I also owe them the work, so I want to show that liability on my balance sheet, unearned revenue. It's a liability. Got it? That's clicking, isn't it?
sorry,
Okay, okay. And then, now, by the way, what happens? Look at this. Here's a credit to unearned revenue, and here's a debit to unearned revenue for exactly the same amount. What's left? Debit cash and credit revenue, because that's what happened. It's the same thing as this one. It's just in 2 different months. And I want to do a financial statement of May 31st where I show the cash and the unearned revenue, but I don't show income because I don't have any yet. So I don't want the revenue. The next month in June, I do have the revenue, so I want to show it. And I no longer have the liability, so I don't want to show it. That's all we're doing. We're just reflecting what happened. Good?
yes,
Okay, this was a good use of time. And it's a good use of time for you too, even though you help those kids. Because what happens? More and more solid, thinking about it more different ways. Good for you too, huh? Right? Okay, cool. All right, what's this one going to be? Let's do the other side, the expense side. What happens in June?
Your prepay goes away
Why does it go away?
because they've done the work.
They did the work, we used it up, right? Okay, because, okay, the prepaid goes away, what do you want to do to it? It's an asset, isn't it? What do you want to do?
Credit it.
Credit it, of course, because that's how we reduce assets, all of them. So prepaid CPA services, I guess, okay, whatever. Okay, prepaid professional, $2,000. What do you want to debit? You used it up. When you use up an asset, trying to generate revenues with it, what is it?
It's an expense.
It's an expense. What would be a really good name for this prepaid CPA you used up?
CPA.
It's a CPA
We're
expense,
using up the account.
and it's just like this one, right? Of course it is. Who cares when you paid for it? It's when you used it up. Did that work? For some reason, we can see the prepaid easier than unearned revenue. I think it's because we're used to paying for things in advance. We're never used to getting paid in advance because nobody ever pays us in advance. Later it'll happen for you. It's kind of nice. I like retainers. Give me $10,000 to do the work later. Actually, I like getting the $10,000 early. I haven't to do the work then when I know no paycheck's coming. Yeah, but anyway, I'll still take the time value money. Are we good?
No, what did I do this late? No, we're good.
We got another one to do though. What? We did
Later.
now in advance, and we got to do later. Okay, so let's go for later. Here we go. So there's the now, there's the in advance, and this is later.
You want us to state that in advance as a deferral right now?
I don't care. You already did. It is, isn't it? Why is it? What are we deferring, by the way? The cash or the revenue? We're deferring the revenue. That's a deferred revenue account. So this is a deferral.
Which is also a liability, right?
Yes. In that case, it's a liability. What's this? What am I deferring? I'm deferring the expense, right?
Yes.
Okay, deferring that expense, that $2,000 of expense. Instead, it's an asset right now until I use it up, and this is also a deferral, but it's a deferral of expense, and that deferral happens to be a what? Prepaid. It's an asset, isn't it?
Yes.
Yeah. So deferring revenue is a liability, creates a liability, right? Because I owe them. But deferring expenses creates an asset because I have it prepaid. I prepaid. Okay, so you're right on. Yeah, you're getting it. It is hard to get the whole picture here in a principles class, isn't it? Explain what's so much. Yeah. Yes.
Okay, let's say you were doing, what is it, biannual statements, and so...
Nobody does biannual, that's 2 years. Okay, yeah, it's semi.
Semi-annual statements.
Yeah.
So, you would have to deal with it on June 30th. Is there some companies that would just expense it right off the bat then still, or would they still do the prepaid?
Oh, sure, they could, of course, of course. Most people do at least monthly statements.
Oh.
Yeah, for internal use monthly, external use quarterly and annual, right? Some companies only external annual, you know, a small company. But internally, Any of my clients, monthly. Do you want to run your business for more than a month without knowing what's going on? No, no, no. A lot, after you get people used to monthly, they say, can I have daily? And it's flat. You have to do all the accruals and deferrals every day. No. So we devise other ways to keep track of their sales, their expenses, and how things are going, day to day. Yeah. So, versus financial statements. You need a full set of statements every day. The meeting I went to today, yeah, the banker says, so are we going to have statements for this board meeting? And I laughed and I said, yeah, we're going to have statements. I don't know if they'll be accurate. I'll give you some. he did laugh, too. Okay. I said, let's see what we can do. All right, so here we go. What did you do for later? What happens first here?
First, you do the service.
You do the service, right? If you did the service, what do you have? Revenue. I did the service to earn revenue. When I did the service, I earned revenue. If they're going to pay me, right? If they have both, if they have, it's realizable, right? Remember that revenue recognition thing? It's revenue if I have delivered the goods or services, and it's the receivable, well, first, it's either realized or realizable. What does realized mean? Got paid. That's a cash transaction. Or I got paid in advance. That's the unearned revenue, too. So I already got the cash, so it's certainly realized, right? Realizable, what does that mean? They're going to pay me. It's a collectible receivable, which means what? They have both the intent and the ability to pay me. Remember that? 1 and 2? So you can use that stuff that you know from 1 and 2 here. Okay? All right? So it's the same stuff. So when we go to account receivable here, we're saying, oh, I think they're going to pay me. It's probable. It's not guaranteed they're going to pay me, but there's nothing guaranteed, right? Remember, assets are probable future economic benefits, right? Probable. And that's why, okay? You know, the money could even, the cash could even be counterfeit. It's not even certain, right? You know, nothing's certain. They gave you a check. Did you really get paid? Only if they have money in the bank, right? So, yeah. Anyway, so it's all probable. Okay, so what do you want to do then in June? They did the work, so they have what? Yeah. So how do you increase revenues? Always. Credit. Would we use the same account? Why not? Who cares when they pay us? It's what we did, right? So of course you'd use the same account. That makes sense? And what would you debit? I don't know why I put it down so far. That was dumb. They didn't pay me. Accounts receivable. Absolutely. That's exactly what you do. Okay? So I got an asset. It just doesn't have the cash. It's receivable. They could give me land. Right? They can give me any asset. Wouldn't be much land, 2,000, but they could give me any asset, right? Okay. What's going to happen on the other side of June 30th? They've got the expense because they used it up. You have the expense in each of these cases because you used it up, not because you paid for it. Got it? So what are we going to call the expense? Cleverly. Whatever we call the other ones, all right? And use the same account, of course. Okay, good. And what are they going to credit? They're not paying for it. What are they going to credit?
Accrued liability.
Some sort of an accrued liability.
Accrued expense, accrued CPA.
Is that a payable?
A payable. I put the word payable on it. Accrued liabilities or payables. Accounts payable is usually for inventory, for buying merchandise inventory. It's usually accounts payable. Some people would go to accounts payable with it. It's fine, right? But maybe CPA payable. I don't care. Professional fees payable. Got it?
Don't use account payable for that?
No, I wouldn't for this. Because I want to make sure you know that it's not inventory. It's not really the same thing. But you will see lots of companies using accounts payable for everything. Right? But, oh, yeah. You know what? If I don't sell product, if I don't sell inventory, I can call it whatever I want because I don't have to worry about keeping it straight, keeping it separate. But usually, if a company's selling goods, Kroger or somebody, Walmart, those folks, or an oil company or something, accounts payable's inventory for the inventory, financing the inventory.
So would like accrued CPA expense work or?
Yeah, you can do that too. You can call it a CPA payable or accrued CPA expense. Either one is an accrued liability. Right? Got it. So you just kind of have to use that. All right. So then what else has to happen?
I have to pay for it.
Yeah. So let's pick a date. Let's give them what? 10 days to pay? July 10th, they pay for it. Okay? So the people that earn the revenue probably get paid, huh? What do they get?
Cash.
So what do you do to cash when you get it?
Debit.
Debit. Right? They got paid.
Oh, I'm on the wrong side. I was
Good.
looking
Okay,
at
back to revenue. Yeah, okay, yeah, sorry, I looked around. Okay, so they got paid. And what don't they have anymore, seeing as they got paid?
Accounts receivable.
I think the account receivables, yeah. Looks good, doesn't it? Okay. So then, July 10th, on the other side. Yes, ma'am.
Don't you debit the CPA payable for 2,000?
I think so. Why are you debiting CPA payable for 2,000?
Because it's like you used it up, like you
Well,
paid
or you paid it off.
You paid it off.
I don't have the liability anymore if I paid it. I don't know about you, but I think when I pay my bills, I don't have to pay them again.
Yeah.
They're gone. Thank goodness. Okay. And then what do you credit? What do you pay it with?
Cash.
Okay. So, did you have all those? Did you have all those? Can you now?
I think so.
Okay. Got some work to do. Okay, so we did this before the weekend.
Yeah.
Okay. I'm not so worried about the quiz. Relax for the quiz. I don't mean don't work. Work on it. Just take the quiz, relax. Who cares how it turns out? Okay? They're not going to determine grading. Really touched it for the week. Over the week. Okay? And you can make it that review.
What?
You can make it to the review tomorrow.
Should be able to.
We'll break it.
For that 3 o'clock?
Yeah. And we'll be doing this some more. Okay? We won't do it the same way. We'll do it, problems and stuff. But yeah, that'll work really great. Okay, do you guys realize that this account receivable here and that receivable there cancel each other? And what you have left is debit cash and credit CPA review,
Same thing.
service revenue, CPA service revenue. What's that?
So it's the same thing you have there.
Yeah, it's the same thing because that's what happened. You got paid for doing the work, right? Okay, and then how about this one? Look at that. That one and that one cancel. What's left? Debit CPA expense credit cash. That's because you used it up and you paid for it. But you want to do a financial statement in between here, don't you? Okay? Right? A really useful thing to do, we're not going to do that because I want to go on to some other stuff, but for you and your time, when you're studying this, do this. Take those journal entries. We'll do one of them to show you what I mean. Take those journal entries and run them through this. I do this in principles all the time. Oh, one other thing. I should have told you this earlier. If you want to go to my principles classes, you're welcome anytime. They are at 10 a.m., 11 a.m. You guys are at noon, right? If you can make it at 11, you're welcome to come. Okay? And go through whatever we're doing. Drop me an email and I'll send you their syllabus. And
Yeah, that'd be great.
it's got their review times on it too, and that we're going to be, they're behind us, of course. They're not doing it as fast as we are.
Right.
And that'd be cool.
This is from County 101. I was going to say you could use that. It has all the notes.
Thank you.
Cool.
Yes.
Okay.
And it has quizzes and tests in the front too.
Everything's changed since then. Nothing changed. Okay, so let's just look at, let's use this one. Let's use just this one in advance for on the expense side. Okay? What I want you to do is take the first journal entry here, debit paid expense, right, is what that is, and credit cash, right? What does that do to the balance sheet and income statement? What does a debit to prepaid CPA does? It's a prepaid. It's therefore a asset. We know it's an asset. Debiting it does what? So we increase this by 2,000, right? What does credit cash do? Decreases an asset by 2,000. So nothing happened to total assets. Nothing happened to liabilities, of course, or equity or revenue or expense because we didn't do anything to any of those accounts, right? No debit or credit. So why would we do this? Well, I don't know. I'd rather have cash than a prepaid, so I'm letting people know that we don't have cash anymore. We have a prepaid instead. Is that useful for stockholders? Yeah. Tell them the truth, right? You can't spend prepaids. You can't spend cash, right? Okay. Then what happens with this next journal entry down here, the second one? It's debit CPA expense, right? Which increases expenses, and it's credit prepaid, which gets rid of that prepaid. Okay? Okay. But what does that increase in expense do to net income? Decreases. And what does that do to equity? Decreases. So what's happened here is, I have no revenue, no liability in either of those entries, right? So nothing happened on liabilities, nothing happened on revenue, but between the two of them, what we end up with is we have 2,000 less assets, cash. We have 2,000 more expense. We have therefore 2,000 less net income, and we have 2,000 less equity. Which equity account's affected, by the way? What account went down?
Retainer.
Retained earnings, right? That's it. Do them for all, right? Flow through it. Okay, what's going on here? Anytime you make a journal entry, you change the financial statements, right? Okay. How does it flow through? How does it work? I think that'll really help. I think you can see the picture all that much better. We're creating financial statements as we go, right? So, kind of fun when I talk to people. You know, these guys today, they clearly don't know what's in a financial statement. That's what you're saying. So, those real numbers. Of course not. They're estimates, right? We don't know what's going on. Okay. So you want to try and do the, whoops, I didn't want to do that. You want to try and do the problem I gave you? What time is it, guys? 4:40. I guess we're 1 to 6. Can you stay a while? I got you really late. This will take a while. Can you stay another 30, 40, 50 minutes?
Yeah.
40.
Yeah.
Maybe 40.
Yeah.
I'll just be late. Huh? Yeah, my car's over here.
Where do you have to be?
I have basketball games to cheer tonight.
And you're cheering? Oh, man. What time are you supposed to be there?
I'm supposed to be there at 5, but it's fine.
Okay, well, we'll push.
This matters more to me.
I'll go yelling. Yeah. I screw up everybody's college life. Okay, you guys wrote that problem down. I don't have it, of course, because it's lost out there. It didn't even record.
Do you want to see it? Can you write down everything? Or?
Actually, I should do that. Just read it.
Okay.
Just read. You guys, all three of you have the front? Yeah, there's no reason for me to write that. Tell me which accounts go together.
You have your accounts receivable.
Okay, I think accounts receivable probably ought to be analyzed together with what?
Unearned revenues.
I think unearned revenues go together with accounts receivable. Why? Accounts receivable is when I did the work, and I'm going to get paid later. It's the accrual. Unearned revenue is
Deferral.
when I got paid in advance. I'm going to do the work later. It's the accrual and the deferral. What else do we need?
Cash received.
Probably cash, right? It's always going to be cash for the sold. Okay, on the revenue side, on the expense side, I'd like not to pay it, but I will. Okay, and then what else?
Yeah.
Those accounts just go together, don't they? You know, the accruals and deferrals, you know, these go together, don't they? See how powerful it is? Okay, so tell me everything you know about those four. And what we can do now, what are we solving for? Well, we'll know what we're solving for as soon as we write down everything we know, because then you left something out. Okay, what do you know about accounts receivable?
Accounts receivable started with 100,000, ended with 96.
Okay, we'll see if this problem works. Nobody's emailed me yet, I don't think, although I've been able to read emails.
Alright, I called you about it. Left you a voicemail about it.
Did it not work?
No, I don't think it did.
Oh, okay, so you tried it and didn't work.
I tried.
Okay, we'll approve. We'll preview wrong or approve I set it up wrong. Okay. Yeah, I was a little worried about that last number I wrote down. You could tell. Okay, where should I go with that?
Well, see, I think if you actually left one of the, accounts receivable or something else
Oh, I gave you
out,
too much
I
information.
think you actually
Oh, all right. Okay, unearned revenue?
did. Unearned revenue started at 15, ended at 9.
Okay. All right. And then do we know anything about cash?
Cash received from customers
Yeah.
would be 3 million.
And that's here, right?
Yes.
So it's like that, isn't it? Okay? I thought zeros up. Okay, the last two zeros up. In each case. And what we're solving for is sales, I guess?
Yes.
I didn't give you that, right? Good. At least, I know we can solve this one. Okay? Are we good? Now if receivables went down, what does that mean? You collected for more than you sold. Because what you sell on account is debit accounts receivable, credit sales. Think of the journal entries. When you sell an account, what did we just do? We debited accounts receivable, right? And we credited sales. So that's one, isn't it? Isn't that one way we can do this? You guys are good with that, aren't you? Everybody? That's how it works, isn't it? What's the other thing we can do?
You could credit unearned revenue and, oh, wait. debit unearned
We
revenue.
could debit unearned revenue and credit sales, right?
Yeah.
Which we earn. That's one thing we could do. What else could we do?
How you can do it in cash.
Oh, sure. We could debit cash and credit sales. Okay. Well, that's the debit to accounts receivable. What's the credit to accounts receivable? What does that mean? What happens when you credit accounts receivable? I'm crediting accounts receivable here. What must I be doing? I received cash, right? Part of that 3,000 is for that. Okay? And then when do you credit unearned revenue?
When you earn sales.
No.
Or, oh,
When you get paid.
yeah.
It's debit cash and credit unearned revenue, isn't it?
Yes.
Absolutely. That's what's going on. You guys know all those entries now, don't you? We're going to use them. You get so you can do this, all that other stuff's going to get you. Okay? So keep pushing till you can. All right. So what do I know here? I know, I don't know what each one of those journal entries are. How would I possibly know? It's all meshed together. But I do know that accounts receivable went down by how much? 4. True? I know that unearned revenue went down by how much? Or, whoops, it's a debit.
Yeah.
Unearned revenue went down by how much? This one, come on, this one was a net debit, right? No, yeah, net credit. I said it right. This one's a net credit of 4. That's a credit of 4. This one is a net debit of 6, right? Unearned revenue went down by 6. When the liability goes down, it has the opposite impact of the asset going down, right? Okay. And then I know how much cash came in, right? It's $3 million, wasn't it? So guess what? All that's left is how much the sales were in total. Did you tell me what the sales were? Sales revenue.
3 million, 2,000.
Right? That's it. I know my sales. Just like that. It's too easy to believe it. You see it? It has to be. That $3 million in cash that came in came from cash sales, from collecting unearned revenue, and from collecting receivables. It totals $3 million. The sales came from credit sales on account, from earning unearned revenue, and from cash sales. Right? So, you see how they all tie together. We good? This part's new, by the way, for all this, for everybody. Looking at it this way, so the concepts aren't. It's just the same deferrals and accruals we were working with. Okay, so now if I'm going to do a cash basis and accrual basis income statement, what am I going to do? Put the company name at the top. I didn't give you a company, but whoever. Then what do you want to do?
Right, what it is.
Income statement,
Yeah.
cash basis. Income statement, accrual basis, got it? And then a date, right? For a year ended, whatever it is. Okay, so then what do we have? We're going to have sales first, aren't we?
Yeah.
Okay. And over here, you can, on the accrual, you can just call it sales. Here, just keep putting cash basis on it. Okay? You do the CPA exam, make sure people know you don't think that's accrual basis. Got it? You can call it cash received from customers too, because that's what it is. Okay, it's a better name. Okay, so what is it? The sales is how much for accrual basis?
For accrual basis.
Uh-huh.
Right there.
It's the 3. That's what we just calculated. 3002. See it? True, isn't it? Okay. What's the cash sales?
3 million.
It's $3 million. Okay. We're on our way, aren't we? Okay. So we just keep doing that. By the way, the scores on this are going to be absolutely dismal on the quiz. It's going to be ugly. Dismal. It's going to be ugly. People just get so confused. They just get lost. Right? After studying and studying and studying. It's a hard concept. But you really see how things work once you can do this. And by the time you're doing the test, half the people will get it. And for the final, 3/4. Okay. Maybe more. Depends on how many drop. Okay? Yeah. We don't have very many drops. Mostly sucked up and do. All right, so then what do we want to do next? What comes next in the income statement? Sales less what?
Cost of goods.
Cost of goods sold. This is gonna be cost of goods sold. I want that next. And the difference between those is gonna be called what?
Gross margin.
Gross margin or gross profit, either one, okay? So this is gonna be cost of goods sold. It's really the amount we paid to our vendors for inventory, right? So I'll just call it cash basis, cost of goods sold, I don't care. And then I'll call this gross profit, cash basis, okay? Probably be better if I didn't. It'd be better if I made up names, right? If I was doing a real statement, cash basis, I wouldn't use those names.
Cash paid to vendors.
I'd say cash paid to vendors, cash received to customers, the difference, I don't know. Margin maybe, it's called margin. Okay, anyway, so let's do the next one. What accounts go together?
Well, you did give us cost of goods sold.
Okay, all right, this time I've got cost of goods sold in the income statement. How much is it?
1,100,000.
I already got that one, okay. 1,100,000. What's the difference between those two? 1,902. Is that right? I already got that. Boy, I'm accumulating points. 3,000,002 less
Yeah.
1,100, right? Okay, 1,100,000. Okay, so I know the debit to cost of goods sold already, don't I? Okay, what accounts go with cost of goods sold? What do you sell to people?
Oh, inventory.
Don't you sell your inventory to them? So much fun. Intelligent people that don't know stuff yet are a lot of fun. Then pretty soon they know better than me and I'm going to find them. Okay, merchandise inventory. And then what else?
Accounts payable.
Sure, how do you buy your inventory? On account. And then do you have to pay for it?
Yeah, I guess so.
Probably, so what account is going to be affected by that?
Cash.
You got it. Okay, so what do we know about merchandise inventory? Anything?
We don't have a beginning, but it ends at 130.
Oh, so this was mean, wasn't it? You don't know the beginning over here. That's what we're going to look for. What does it end up at?
30.
130. Okay? 130,000. What about accounts payable? What do I know?
Begins at 95, ends at 100.
Okay, now what that would tell me is that I borrowed 5 more than I paid. You guys think so? You owed them 95 and now you owe them 100? Come on, right? All your vendors. Do we know what happened to cash?
We paid vendors $1,050,000.
We got it made, don't we? I know this debit to cost of goods sold. I know this credit to cash. How much is my net credit to accounts payable? It is a credit. I increased it by 5. You guys agree with me?
Yeah.
Can we write down a journal entry here? Of course we can. I don't know if merchandise inventory increased or decreased here, but I can find out really fast, can I?
I guess so.
Right? Okay, what am I going to do? I know cost of goods sold is 1,000,001. What's the journal entry for recording cost of goods sold? It's debit cost of goods sold.
Credit merchandise inventory.
Yeah, where'd it come from? Merchandise inventory. It did, didn't it? You guys agree? You're not letting him do all the talking, but you do agree, don't you? I wouldn't let him do all the talking. He's not that smart. So I'll screw you up. Merchandise inventory, 1,100,000. Is that right? It's true, isn't it? Isn't this here the same as that? It's got to be, doesn't it? Where did the cost of goods sold come from? They came out of inventory. What do you do when you sell something to a customer? Product. You debit cost of goods sold, you credit inventory, don't you? You do know that too, don't you? Use it. We good?
What if we did not know cost of goods sold?
I either have to give you cost, I can only give you one unknown in
Right.
this entire thing here. If you didn't know it, I'd be solvent for it. If I don't know it, it's the last one. Like sales we didn't know last time,
Yeah, okay,
see, solve for sales.
okay.
If I don't tell you cost of goods sold, I have to tell you all the other stuff, so you can get there. Now, I may give you 2 unknowns, right? And you have to find something you can solve, right? If there's 2 unknowns, don't do this weekend. Okay? But as long as I can do it, I'm going, right? I'm fine. If I couldn't do it, I'd go to the next set and do those. The next accounts would go together. Does that make sense? If I didn't know 2 of them, maybe that's really your question. If I didn't know 2 of these things here, I'd have to do the next set, and then I'd back into it at the end. What it must have been. Okay?
So you're finding.
Just analytical thought is all it is.
So you're finding the accounts that goes together, and then solve it,
You got it. If I can.
if you can.
And if I can't, I'll go to the next set of them, solve that.
Solve that.
And as soon as I know a whole bunch of things over here on that income statement, as soon as I got everything but one on the income statement, I can solve the last one of those too.
Correct.
And we're gonna do that here.
Well, yeah,
Okay.
you can't,
Yeah, you can already now, okay. And if you notice that, you can do it.
Well, see, that's
It's okay.
That's what screwed me up last time, because you gave us net income, and I figured out operating expenses first.
Yeah.
And so when I
Oh,
reversed
I
it,
gave you enough information to do it without the net income. So I should have had you calculate net income then. Okay, well, let's try. Let's keep going.
yeah,
All right, so what else would we do? Now that took care of the cost of goods sold. What would happen to accounts payable?
you would put your cash.
Let's take that 5 out of there for a minute. What would happen to accounts payable? You paid out $1,050 in cash, did you? What are you paying off? Yeah, that's the credit to accounts payable, isn't it? I'm sorry, that's the debit to accounts payable, credit to cash. You guys agree with that one? This 1,050 would reduce accounts payable, wouldn't it?
So this is just all under the assumption, like, everything we buy for inventory is accounted.
Yeah, but you wouldn't have to do it that way. You could just use the differences too. It'd still work.
Okay.
Okay. You could do it the way I did sales too. But this is logical here, isn't it? Okay. So now we're in pretty good shape. What do we have left?
You figure out what the debt or credit was.
What's the credit to accounts payable to make it work, right? And what's that entry going to be like? It's going to be credit accounts payable and debit what? What am I buying? Merchandise inventory, right? So how much merchandise inventory must they have bought? Well, I don't know. I can't tell because this is an unknown, right? And that's an unknown. So there's two unknowns, but oh, I can figure out how much the credit is to accounts payable. Can you? Started at 95. I paid up $1,050,000, and now it's 100. What do you think it is?
1,055,000.
It's 1,055. And as soon as I have that, this credit is 1,055, right? What's the debit to merchandise inventory? Seeing as debits have to equal credits. 1,055. And it's not just because debits have to equal credits, it's because you borrowed $1,055,000 from your vendors. Of course, they gave you that much inventory, right? Why does this have to be 1,055 up here? The credit. Because I started at 95. That'll help everybody at home a lot. Started at 95 for accounts payable, right?
Right. I
I know it ended at 100.
Okay.
I know I took 1,050 out because that's how much got paid, right? So how much must I have put in? 1,055, right? 95 plus 1,055,000 less 1,050,000 is 100. It's gotta be. If you know this,
Your debits have to equal your credit.
No, I got that,
No.
I'm missing the math, okay, hold on, give me a second.
on the inventory, if you, I'm sorry, on the accounts payable, let's do that first. On the accounts payable, my writing is so terrible up there. If you started at 95,
Okay,
you ended up at 100,
okay,
and you know that you must have debited accounts payable for $1,050,000 because you credited cash for $1,050,000, right? We knew that. We knew we credited cash for $1,050,000. That's what we paid the vendors. So the debit must be to accounts payable. That's what you should do.
yeah.
Okay, now, what's this number? That's all we're saying. What is it? What's 5 more than the $1,050,000?
Yeah,
Are we there now?
now I got it, I didn't see where that
So-
1050 came from.
Yeah, and we're gonna do the same thing on inventory now, okay? So, are we good? Everybody's good? Okay, so now what do we know about inventory? Well, I know I debited inventory for 1,055, don't I? Just put it in there. You see it? That's that debit right there, isn't it? So what did you start at if you added $1,055,000 and then you took away $1,001,000 and it ends up 130 at the end? What's that number? Some number plus 1,055 less 1,001,000 leaves you 130. What was it at the beginning?
175.
175. And then double check yourself. After you calculate it, take 175 plus 1,055, subtract 1,100, and you get 130. You see it? All we said, I'll do it again over here. We knew the 130 ending balance. We knew 1,100 came out. And now we also know 1055 went in, right? What did it start at? Well, it went down by 45, didn't it? So it has to be 45 more than the 130. 175. I agree. We got that answer, don't we? And these just pop out for you, don't they? Okay, now, do we know the cost of goods sold? We do, don't we? In fact, I just gave it to you, didn't I?
Yeah.
Do we know the cash paid out? I just
Yeah.
gave you that too. Shoot, you could have done these right away. We didn't need to wait. Okay, so what's the gross profit from a cash basis standpoint? The difference between our cash in from customers and cash out to vendors.
1,950,000.
Okay, here we are so far. Everybody good? Pretty good at this, aren't we?
Quick question. If you wanted to do an actual income statement that way, don't you put like a fourth line of in thousands of dollars?
Oh, up at the top you should say yes. Up at the top of both of them it should be like this.
Is that a fourth line to it, or is that?
Yeah, okay, that's right. Typically, put it in. Yeah. So on both of them, do that. Or millions or whatever it is. Yeah. Big company. What do we have left to do?
Figure out the net income.
Operating expenses. And when I take that away, I'll have my net income on it. That's all I gave you were those types of expenses. And of course, in real life, you have more. So this is going to be operating expense cash basis, how much we paid for operating expenses, how much cash went out for it. And this is going to be my accrual basis operating expenses, right? And the difference is going to be my net income. Okay?
Net income is 180,000.
So I know net income's 180.
Yeah.
So guess what operating expenses must be? 1902 less 180. How much is that? I meant to leave another unknown, didn't I?
1722.
172. Okay? So let's do it. I'm really hoping I was okay and you weren't. The feeling. Yeah, okay. Anyway, a bad feeling about it. What accounts go together for operating expenses?
But operating.
Maybe operating expense? Did I give you operating expenses too?
No.
Oh, I didn't. So we just calculated them as being what?
That.
What did I start with at the beginning, by the way?
Zero, because it's a nominal account.
Nothing. That's right. It's nominal or temporary. You closed it, right? All those revenue expense accounts start at zero, don't they? What did it end up at, we think? 1722, I guess. Is that what it was? Okay. And then what accounts are going to go with it? You're going to pay it. So what's that? Cash? You didn't pay all of it, right? You might have paid more, might have paid less. So cash. What else do we have?
You have accrued liability.
Sure, you could have accrued liabilities, right? What else could you have? That's what? Where I debit expense here, and I credit accrued liability, don't I? I could also debit expense and credit cash, right? What else could I do? I could debit expense and credit what? What's the other thing? What's this other one? It's going to be the asset instead of the liability.
Well, it'd be prepaid.
It's prepaid, yeah, so my prepaids go here. My prepaids are the deferred asset, right? And my accrued liabilities are the accrued liability. Yeah. Okay, they are. Got it? That's the accrual. Okay, and then also, when I pay out cash, I could be paying out cash for what? Prepaids, right? And I could be paying out cash for what else?
Accrued liability.
Paying off accrued liabilities. True? Those things happen. We know those entries, don't we? Does that look just like the sales ones? Yes. Except instead of receivables, it's payables. Instead of prepaids, it's unearned revenue. Instead of an expense, it's revenue. There you go. Okay? By the way, if you know how to do one revenue, you know how to do all of them. You know, if you do one expense, you know how to do all of them. The millions there can be. Right? Power. So now what do we do? What do we know about prepaids? Go ahead and prove I gave you too much.
Prepaids were beginning of 4, ended at 6.
And this is 4. This is 6. What's the change there? That means I bought more than I used. Guys, we agree with that by 2000. So it's a debit of 2 here, isn't it? So I'm going to debit prepaids for 2. My net is a debit of 2. Right? It's the difference between the debits, prepaids, and the credits, prepaids. What do I know about accrued liabilities? Anything?
It began at 8, ended at 7.
All right, so that's a debit of 1, isn't it? So, way to go, Keith. I should put that down. Prepaid is a debit of 2. Oh, I guess not, it's all right. Prepaid is a debit of 2. And accrued liabilities is a debit of 1. You guys with me? That's this one and this one. How much it changed by, right? It's just how much it changed by. And did I give you cash too?
Yes, you did.
That's the mistake I made. Because I know the operating expenses are 1722. So everybody at home, erase the cash one I gave you.
For operations?
Yeah, erase just cross off the one for cash. I had to not give you one more thing.
Yeah.
Because I gave you the net income, or I should have not given you the net income, and then you calculate the net income.
What was the
I gave you one
number for
thing today.
operations?
What?
What was the number for that?
What's the cash flow from operations?
Cash paid for operations is 1,700,000.
Yeah, we didn't know, we don't
I
need.
didn't write that down, so that worked out.
Oh, yours would have worked, okay. But anyway, everybody at home, get rid of the 1,000,007. You guys get rid of the 1,000,007. Darn it, I knew I'd screwed it up, but I'm gonna hurry. Yeah.
I was kind of surprised when I left. I was like, that's a lot of information you actually gave us.
Yeah, a little too much, a little too much. Dug a hole for myself. Okay, anyway, but this 1722 would have to be operating expense, wouldn't it?
Yeah.
And then the one unknown that I have left here, we could do what?
Software.
It'd be a credit to what?
Cash.
Cash. Because I paid for the operating expenses and I increased prepaids and I reduced accrued liabilities. So how much is that?
7, 2, 4, 3, 5.
1725.
Sale.
Actually, that's really a good experience for you and anybody at home that worked this and realize that. That's even better because you struggled a while trying to figure out what's wrong with this problem. And then you figure out, oh, Keith made a mistake. Fantastic. Fantastic. When you're working for your boss and they screw something up, you work on it and you don't immediately go say, hey, you screwed this up. What you do is you try to do it. And no, I just don't believe it. And then you go see them and they can either show you or they can agree, hey, yeah, thanks for catching that. Good. Okay? So everybody at home, I'm really sorry. You guys do working on it, you know. Well, I'm not that sorry. It's a good challenge. Okay, so what are we going to do with this, though? We need one more thing, don't we? What is it? I need to know the cash that went out, don't I? What do I need it for? My income statement cash basis. So the cash that went out is 1725. So what is the net income? Cash basis.
Is
1950 less 1725. 225? Okay? So that should have been no problem. All right?
so then, would your ending for cash, or are we just assuming it's
Oh,
gonna
let's
be-
do ending cash balance. That's right. You got to do that too. So let's do one more thing. What happened to cash? Okay? So did I tell you the beginning cash?
Yes,
What was it?
80,000.
Hope I don't run out of cash. Okay. Sometimes they have negative cash at the end. Oh, well, you could, right? Bank overdraft. What happens to cash? Let's see. What happened to cash? Oh, I hit the wrong thing. Here. What happened? What did I do? Oh, I lost my cash thing. Okay, what happened to cash on the first in the revenues? 3 million cash came in, right? So you started with 80 and you added 3 million. Right? Did you guys stay with me? If you two did, they'll stay well at home. I started with 80 and I just took my first journal entry and picked up the cash that came in, right? 3,000. So then what's the second journal entry? Cash going out. How much do we have for the second one? Not too far. Inventory, how much cash went out?
Yeah.
1050, was it?
Could you just look up?
Oh, I can just look right over here.
That's what I was-
They're there, yeah. But they're right out of the journal entries, right? I
Yeah.
guess that's the point I was going to make. It's right out of the journal entries. That's where we got them in the first place. Okay, and then what do we have in operating expenses?
1725.
1725 here. Yeah, sure, and pick up the right one, right? Okay, so we're going to have 80 start with, then we put 3 million from the sales over here. We're going to take out 1050 for cost of goods sold, not cost of goods sold really, is payments on inventory, right? And then payments on operating expenses, 1725. And how much cash do we have left at the end? Oh, I have plenty.
Well, then it'd be 80 plus that 225, so 305.
Well, isn't that interesting? You mean you could have just taken the 80 plus the 225 cash basis income? Of course you could, which is going to be 305. And we proved ourselves right. That's what it is. Whoops. Yeah, true.
So this,
Right?
Yeah?
I guess the problem.
Not really. You're not going to get those numbers without doing the work.
Okay, so like,
But yeah, would a shortcut be to take the 80 beginning cash and add the 225 positive cash flow? Of course it would. Yeah. But it's from all those entries, right? That's what happened.
So I
You'd be
guess,
making those journal entries into your cash account, right? You know what they are. So you're there.
so we're just supposed to assume that like there's no other cash that went out in other cases.
There isn't. This is everything they've got going. Well, they didn't buy any equipment or pay off any debt or
That's
yeah. Well, it's not supposed to be realistic. It's supposed to be to see whether or not you can do accruals and deferrals. Okay. You're converting your cash basis income statement to an accrual basis. You're converting your cash basis or accrual basis income statement to cash basis, one way or the other, right? Okay. You're not. But we can do a cash basis balance sheet too, accrual basis balance sheet. After we do when you do the income statement, it automatically converts it. Yeah. Same interest rate. No, probably not. I probably won't have you do a conversion on balance sheet. No. If you can do it for the income statement, you can figure out how to do it for a balance sheet. But
I feel like since you said that, you're gonna do it.
yeah.
no, like, that's one thing about
That's-
Pete. He will
that's-
not do us wrong.
That's beyond this. That's beyond this.
That's not fair.
That
He
would
won't do
just
that.
confuse it.
That's fair for him.
Okay, I want you to get these deferrals and accruals wired. Okay, I want you guys to do one more thing with the stuff that you have written down. Okay? And then it's only 5:13. Okay, we did good. And you guys actually understand what I did? Is it okay? All right, good. All that deferral and accrual stuff we did just before this made it easier, didn't it?
It did.
Because you know what those entries are. Let yourself know what you know when you're working. Don't panic. What people do is they panic and say, I can't remember. I can't remember anything. You have to figure it out. Nothing's remembered. It's figured out. I want you to do one more thing with the information that you have on that statement. I want to start with the cash basis income, net income cash basis. They like you to do this on the CPA exam, and I think it's kind of silly because it's too easy. Anyway, the cash basis income is 225. I would like you to do what's called a reconciliation, which means explaining the change, down to net income accrual, and we can go either direction. I would like you to list all the things that caused that change from 225 down to 180. I think they really only made 180, but they increased their cash by 225. That's what that is, right? List everything that's there. And you know what? If you look at those journal entries, it's a piece of cake. There's nothing to it. Every single one of them, though, all the things that cost it. All the things that cost it. Which is just deferrals and accruals. Increases and decreases
So I
in the
can just say
deferrals and accruals.
Deferral of
Revenues of different types of expenses. Accruals of revenues, different types of, and deferrals and accruals of different types of revenues. Revenues and expenses. Say that right? Yeah, absolutely. Okay. So just list the accounts, really. I need to go home and write a quiz, guys. Do it later.
I support that. I think the three of us support it in your whole class.
And then we'll just keep going up right on into Christmas, right? No problem. I take a PhD class. Oh, not Christmas, summer. January, summer, right? You know, May, a couple weeks you have before summer school starts. We use that for this class. No, we couldn't. Not doing it. Neither are you, right?
Derby.
Yes. It's Derby.
Derby.
Yes, playing, right? Oh, alright. What?
They don't want you to be in school for the year because they know that nobody can do anything with art. So we have to have school during the year.
I don't even play that much, and I
The administration, I think, or at least student services are all, your parents will make you go home before your one big chunky batch. No, it's actually a lot of fun. So you get some scholarships. Good for the community. I got to go to the church a couple times, the Oaks a couple times. Only paid once. My wife was the NBA director. Did all the advertising. So, Courier Journal. There's tickets to go. Yeah, her tickets to go. I got to go with her and married her.
That's why she takes the 20 out.
It was fun. I enjoyed it. I don't like crowds a lot, but it's fun to just go and be there. Say you've been there, I guess.
Yeah, I've never actually been to Churchill Downs for Derby, but I've been there for like,
Have you gone to Oaks?
Downs After Dark.
Oaks is nice. Down Desert Dogs. I like to go to the track when nobody's there. It's a beautiful place. Any day you can go and there's a handful of people.
Have you gone for morning workouts?
I never have.
That's
Pretty
the
neat.
best.
Beautiful,
Sunrise,
and
it's very cool.
we're out there, the
Yeah.
horses running. What a beautiful place it is. Yeah.
Last year we went to the backside for Derby, and we were sharing a barn with Bob Baffert's horses.
Wow, what
So
fun.
we were just on the other side, like we were just
Yeah.
weren't really involved, but we
You got to
showed up.
see them.
Yeah, that was
Incredible animals. Wow, it's incredible. Yeah. I'd like to go down in there. It's winter. It's not the, well, actually one time we got to sit right across from the winner's circle. That was at Derby too. It was really neat. One of those big plastic buildings. It's really a tent, but it's kind of a blow-up building they put out there. It was really nice.
What
The
year did
gambling
you go?
was right inside there,
Wow.
I was with rich people. Yeah, but what's that?
I was saying, what year did you
Oh,
go?
Bill,
Don't remember.
I can't remember. Doesn't matter. They're all the same. I can't remember the horses. I can't remember who won the Super Bowl either. I don't care. It's all about people making money, those things. Now, if you want to know what Oregon's done, that's different. Yeah, amateur sports, sure they are. Nike money doesn't make any difference. So you guys done? What are they?
An increase in cost of goods sold.
Let's start at the beginning. Let's start with the sales. Not just an increase in cost of goods sold. That won't do it. You got to give me what happened. What caused it? I can tell. I could go down this list and see sales are different, cost of goods sold is different, and operating expenses are different, and write it down. But no, what caused that? What caused sales to be different, you guys? Come on. What caused sales to be different? Uh-oh. Now I did it. Here we go. This is it. What caused sales to be different?
A decrease in accounts receivable.
I think accounts receivable decreased and unearned revenue increased. So what you could say, is that right? Ah, that's pretty easy.
So that's, okay.
So what you could say here is increase in accounts receivable, was it?
Yes.
That means debit accounts receivable, credit sales, more net income. 4 was it? Or 6?
4.
Okay, and then there was a decrease or an increase in unearned revenue.
Decrease.
Decrease in unearned revenue, which that would be a debit to unearned revenue, right?
Yes.
And a credit to sales. Is that right?
Mm-hmm.
That's what you guys are suggesting to me.
Wait.
Increase in accounts receivable and a decrease in unearned revenue. Really? And that was 6, was it? So you think that the sales went up by 10, it looks
No.
like, 4 plus 6. I
No,
thought
your
the sales
accounts-
only went up by 2.
Your accounts receivable would have already been recorded as an accrual sale.
So did they go up or down? Did you debit or credit accounts receivable? What'd your journal entry do? Debited accounts receivable?
No, I think you credited it.
No.
I'm sorry.
Did it?
Yes, correct.
All right, you guys.
Dang it.
It's not so easy, is it?
We were doing so.
I think accounts receivable went down, which means I collected 4 more cash. Included in cash basis is 4,000 of cash that was not earned this time, right? That is less income. less sales, less income, right? And unearned revenue went down. That's a debit to unearned revenue and a credit to sales. That's more revenue, more income, right? So this one is less revenue than the cash flow. And this is more revenue than the cash flow. Nothing to it. Do it for the cost of goods sold. What two things affect the cost of goods sold?
The inventory, or
Yeah, inventory on the balance sheet and
the account.
accounts payable. Yeah, look at your journal entry. What does it have in it?
Okay, makes a lot more sense.
There's the entries right there. But we don't just want those entries, though. We want the change, don't we? So look at the changes in the account. That bounce it all over the place like we got it in front of you. People at home should have it in front of them too. There they are, huh? Inventory and accounts payable. What happened to inventory? Started at 175, went down to 130. That's debit cost of goods sold and credit inventory. My cost of goods sold is really 45 more than the cash I paid out. Would you guys agree with that? It is, isn't it? What about accounts payable?
It's 5.
It went up by 5. What's that?
Increase in accounts payable.
Increase in accounts payable, but it's going to wash through to what when you look at the entry? It makes cost of goods sold more. Take a look at this. Cost of goods sold in the journal entry is 1,000,001, right?
Yeah.
We've got 1,000,001 of cost of goods sold, but cash basis is only 1,050,000. Why?
Because
What happened to inventory? Decrease in inventory, which is debit cost of goods sold, right?
yes.
And credit inventory. So for cash basis, I have less expense, right? Or I'm writing it backwards. For cash basis, I used inventory, right? So I used up inventory. So accrual basis would be what? More expense. This is writing down what accrual basis is.
Yeah.
More expense for accrual basis, less for cash basis. Less cash went out. How much was that? That was 45, wasn't it?
Yes.
Okay. It's 45 more expense. What does that do to your income?
Decrease.
Decrease. Okay, so more expense is decrease in income, right? More revenue is increase in income. So you got to think about this a while too, right? They're going backwards, right?
Yeah.
These are going the opposite direction of the expenses down here, of course, right? You know, expenses are debits, revenues are credit. Yeah, okay. Then what happened to accounts payable, up or down?
It went up by 5.
Increase in accounts payable. So what that means is I bought 5 inventory I didn't pay for, which affected cost of goods sold, didn't it?
Which would be more expensive.
That's more expense too, you bet. Because I used the inventory, right? Bought it and used it, but I didn't pay for it, okay? So that's more expense by 5, which is less income. So there's the 50 change between those two, right?
Yes.
So we've explained the 2 on the revenues, and we've explained the 50 on the cost of goods sold. All right, do operations. What's operating? And go back to your journal entries and look at them, and they're right there in front of you. See, if I like to do these reviews, there's no way you could do this in a class. You just can't. So for intermediate, I just meet all the time. By the way, in 212, Deck will have some reviews, but not as much as we do. And in 313, we probably won't do it. You don't need them anymore. Because you can do this for yourself.
Oh, God.
And in auditing, we certainly never would do it. They're board in class.
Summer, you're telling me I'm not gonna have a review session?
Oh, very good. For 313, for 212, you're not doing 313 in summer.
Yeah, we are.
You're in 211 now.
Yep.
You don't want to do 313. You can do 317 in summer if you want, or something else. I mean, other classes, we got to get together. You do not want to take 313 before you do 212.
Because
I will crucify you.
the only accounting classes are 313 and 418.
All right, well, then you don't take an accounting class. You take something else. Or Or you two could take the summer off. You went last summer. You went
Oh,
every
heck
summer.
no, I'm going.
Let's look at your schedule, so let's figure it out. Have we ever sat down and figured out your full
No,
5
you
years?
didn't plan my life.
We gotta do that.
Dr. Schrader did.
You do not wanna do 313 before 212. No. No, there's no reason to. You guys are pregnant. Okay.
So,
Now, you'll probably do 313 before 212. Because you're a certificate student, you're in a hurry. And that'll be okay. You just really work this semester.
Good luck.
And really work. They don't need it. And it'll be hell. But it'll make 212 easier. Okay. Yeah. Unfortunately, we don't do 212 in the summer. It's exactly no more. Okay, can you do those? Can you do the last one?
yes.
What's the deal? What happened to the operating expenses?
Operating expenses for 3 months.
Yeah, so you got prepaid, it's 2, increase in prepaids, and decrease in accrued liabilities. Now, what does that mean? More cash went out than the operating expenses, right? The operating expenses are less than the cash. You can see that, can't you? It's right there. Okay, so let's go back to our statement. Now that I've completely lost it, where is it? There it is. Okay, what do? What happened to prepaids? We increased them. So some of the cash that went out, right, was for prepaids, not for expense. So what does that mean? Less expense for accrual than for cash. Okay, this is compared to cash, right, guys? Compared to cash. Okay, so less expense by, how much was it, 2 on that one?
Yes.
Okay. So if I have less expense, I have more income. So no brackets around that, right?
Yes.
Okay. And then what happened to accrued liabilities?
Went down.
Decrease in accrued liabilities. Now what that means is that I paid out one more cash. It was one, wasn't it? One more in cash than the expense was, right? So that's also less expense, isn't it?
Yeah.
There's a 3 difference. If we're explaining this 3 difference right here, that's all we're doing. Okay? Less expense. Pretty cool, huh?
Yeah.
Now let's check ourselves. 225 minus 4 plus 6 minus 45 minus 5 plus 2 plus 1. You get 180. And so you know you got it right when you're done, or you screwed it up. Like I keep trying to do. I always do. It always gets me.
Yep.
Especially when you're trying to say it. Doing it's easier than saying it. It worked? We are brilliant people.
Okay.
And I'm tired, you're tired, and I think an hour and 44 minutes of working practice. What do you think?
Yes.
Rest a little and do some study. Study.
Can I ask one last question?
Do not study tomorrow morning. Take a quiz tomorrow. And then start studying again. Okay? Rest a little. Study. Never study like you
Wait, our test is this weekend, right? Okay, so,
Yeah, you can study frantically and then take it on Sunday.
Yeah.
Just don't look at it. Of course, we'll talk about that class. If you don't look at it, because that'll correct your studying, and that's waste, it's horrible. It's unfair, it's unethical, but it's also, it would really diminish your learning. So look at it, it's all a win-win-win. You don't look at it, and then you don't go back to your book or your notes or anything after you start working. Okay? So that's the deal. But you can do it on Sunday, and then you can have Friday and Saturday, Friday evening and Saturday all day.
Yeah, but I need to do it on Saturday, because then on Sunday I have to recheck report.
Well, that's okay. You're in pretty good shape with this country. You'll be all right.
Don't tell me that.
You'll be fine. You don't have to get A's in it. No, you don't. It doesn't happen. So, there's just too much to do. It's either that, or if you want to get A's in everything, just take 3 credits at a time. Graduate about 20 years. You'll be fine. I was going to close the blinds. They're already closed. Man, that's nice and bright. Love it. Goodbye, people at home. Study your asses off. Really.